All right, welcome to this live session. It's been an action-packed day. We have seen very heavy market volume, heavy market volatility for today. We have seen price pushing in heavy momentum across most of those major currency crosses. Yet, yeah, most of them are still not broken out of their ranges. So let's just check out those charts one after the other to see what's been going on. Okay, all right, now you are looking into my charts. Let's begin from the New Zealand dollar against the Swiss franc. Remember, in one of our earlier reviews we talked about the New Zealand dollar going weak in the future, and we are beginning to see that already. You can see how the New Zealand dollar is already giving up. That has been predicted for some days now. We are beginning to see that. Well, we are involved in one trade, which is the New Zealand dollar against the Japanese yen. For those of you who have been following the live stream, you are quite aware that we are short on the New Zealand dollar against the Japanese yen. Price made lots of hesitation in the 4 hours time frame with this sideways behavior. You can see that sideways price behavior. We also talk about the possibility of a fake breakout of that level, where we have been seeing price finding resistance there, then giving that fake breakout. You see the fake breakout. Price pushed above as if it wanted to break, then came back in. That is eventually fake breakout. We did analyze that, and we predicted that to happen, and it did happen. Okay, it came very close to the stop loss. That was the stop loss level, but as a result of that fake breakout, we saw the push back down. We didn't want to keep adding up trades along the line. We just want to take one shot, just this trade alone, keeping the stop loss right there. Okay, all right, in the 1 hour time frame, this pair price is now sitting at some small profit, I think for about plus 30 pips profit right now. That's not the plan for this trade. Like I said, this is a long-term trade, so this trade is likely going to run for some days, for some months, for many weeks. So you just have to keep this run. Okay, now in the 1 hour time frame, we can maintain this line. We can just keep it here for now, but I am not sure price is going to come back here that easily. It has broken in a clear directional, showing a clear directional bias. So pushing back here is something that might be hard to see. But if it does push back to that area, it's another good point to look for short entries, because you have a point of confluence. Let me draw that line. Let me draw that point of confluence. Okay. All right, so that's the double level of former support, which may now act as resistance, and coming together where you have that falling trend line. So if price does push to the upside towards that zone right there, it's another good point to look for short entries. Okay, that is what might likely happen, but of course I am not seeing the possibility of that happening, because we are seeing this price action here. We already got the breakout. This is the pullback. Price is likely to keep crawling to the downside. Okay, the New Zealand dollar against the Japanese yen. For me, my advice here is to keep searching for short opportunities for the next 2 months. Okay, just keep searching for short opportunities for the next 2 months. Hopefully price is going to stay down and we are not touching this trade. We are keeping this trade running. All right, in the long term, let's see what we have in the okay, in the weekly time frame, I am liking what is going on here. Remember we had proposed okay, so we cannot keep it here. So it's another possible flat bottom triangle. The type of price action we are seeing here, if this candle closed just the way it is, as an inverted hammer formation there, we are going to have a very bearish price behavior for next week. So let's keep that trade. Don't touch it. That trade was taken at an optimal area. All right, let's redefine our levels. We can now keep this. Assuming this is today's low, let's keep this here. I'm sorry if you're an intraday trader trading the Hector Daville trading strategy for today. There wouldn't have been any trading opportunity for you. Well, probably you have taken that shot somewhere around as that pullback happened. But to the best of my knowledge, there is no clean market flow setup here. The only clean market flow setup here is this one here. If price was able to make that pullback up to that zone, that would have been a fantastic market flow setup. All right, let's push this aside and move on to the next one, the New Zealand dollar against the Swiss franc. We had also called for this, where we were talking about a possible flat bottom triangle as well. We talked about this being an optimal area of resistance and nobody should go long. Of course, you can see the reaction of that level. Okay, it is still bearish. Ranging market, this is a range. So we are only trying to analyze the price within this range. Actually, if you are a core Hector Daville trader, you will be waiting for price to break through this level, this double level of support. That is when you want to be looking for your short entries. That means for all of these weeks, for all of these many weeks, you are not trading this. All right, especially if you're a long-term trader, you are not trading the market. But we have now switched into analyzing ranges, because that is what the market tends to offer to us these days. Okay, in the daily time frame, this is the next level of support for the New Zealand dollar against the Swiss franc. This one here. I do not think that price is going to do much for tomorrow. We might not see much of price action for tomorrow. This was a key level of support that was broken. This one here, we can take it out right now. In the 1 hour time frame, that key level of support, wow, that was a nice pullback, but happened quite early, in the very early hours before the London market opened. That was when the pullback happened. We didn't take that trade. We're not there. Actually, we are already involved in the New Zealand dollar against the Japanese yen, so we will not be trading the New Zealand dollar against the Swiss franc. Anyway, the directional bias remains to the downside. We can mark our intraday level of support, which is now this one here. Okay, that's our intraday level of support. Just give me a second. Okay, this is our, just give me one. All right, sorry about that. This is our intraday level of support, and that level has been broken. If price makes any pullback to that area, should find resistance. Again, that is not likely to happen, because breakout went too far and price is already hesitating too much around that level. Like I said, we might not see much happening for tomorrow, because the week is coming to an end. So for the New Zealand dollar against the Swiss franc, if you are interested trading this pair, you want to be always focused and looking for short opportunities, because price has respected that level. It has confirmed this level of resistance. So the next level to be hit is this level of support. Even though we might be seeing some hesitation here, eventually prices are coming to this level of support. So if you are looking for trades here, it's better to search for short opportunities. I am not saying that you should click on your sell button right now, believing that price is actually coming to the downside. I am not saying you should do that. You must trade a strategy, okay? And it's only your strategy that should tell you when to get into a trade and when to get out of the trade. So you should be following your strategy, searching for only those are short opportunities your strategy calls for in the New Zealand dollar against the Swiss franc. Do not take blind entries. At the end of the day, you might have problems with that, because even though this pair is bearish, you might find some upward wiggle, then coming back down. It doesn't move in a straight line. All right, let's look into the next one. The sterling pounds against the Canadian dollar. We were actually following price in the daily time frame, where we were looking to trade this fake breakout, or even a reversal formation here. You can see that red candle right here. We're looking to trade that off this swing as of was it the day before yesterday. Price rather, instead of pushing to the upside, to the downside, price rather gave a solid breakout of that level of resistance. Okay, it's a nice one. So what do we need to do? We are now waiting for that full reversal. We want price to come back down. Let me just give you an idea of what we are expecting. Price to make some pullbacks towards that broken level of former resistance. This is former resistance. We want price to give us some pullbacks, maybe 1 or 2 or 3 red candles a pullback. Usually you should see price make some, let's say 1, okay, or even 2 red candles a pullback before finding the reversal formation, maybe a pin bar for a push to the upside, okay, for a continuation move. So we are actually searching for a continuation formations. That hasn't happened, so we will wait for that. We'll be following that in the daily time frame. Whereas in the 4-hour time frame, we had the first bounce of the dynamic area of support. In this case, that's the first bounce right there, confirming this trend to the upside. So if price makes any pullback to that area where we were actually waiting for in the daily time frame, this would be a nice point to look for buy entry. Okay, that's it. So what you want to see is wait for that pullback. Price should keep making the pullback. Somewhere in the air is where price might likely bounce to the upside on the sterling pounds against the Canadian dollar. Again, if you are not familiar with this strategy, please do not try to click on your buy button here. You need to know when. Your strategy needs to tell you when to take that trade. All right, let's remove this. Bring back this line. Okay, since we are having a channel, for now this is not clear, but we can just leave it at that. With this type of price behavior, you know price is ready to come down. So stop clicking on your buy button at this particular level. Don't click on your buy button there. The American dollar against the Japanese yen. This is a heavily bearish pair. I am quite sad with this one because I closed my trade quite early. I was short somewhere in here, then close that trade out. Actually, my target was just where price is actually heading to. My target was somewhere around in here. Well, feel sad, but no problems. We will keep trading. The market is always there. In the American dollar against the Japanese yen, this is the 4 hours time frame. You know, we have a massive trend here already. A massive trend. Price pushing to the downside. Okay, let me respond to that. Well, it's just the way I manage my losses. Okay, it's just the way I manage my losses. All right. The American dollar against the Japanese yen. This is the 4 hours time frame. You can see that trend line, that trend pushing to the downside. Apply the 3SM indicator, and you will see how price has bounced off that area, that the dynamic area of resistance right there. So for us to trade, we don't need to click on our sell buttons at this particular level right now. This is not the area to click on your sell button. You actually want price to make some pullback to that zone. That is it, for you to look for your short entries at this particular level. That is just too low. You can see all the projection bands have been hit. Okay, those projection bands have been hit. You will need to see a pullback to that area before looking for your short entry. So American dollar against Japanese yen, you need to wait for that pullback. In the 1 hour time frame, we are already having the early hint that price is almost facing exhaustion with that little channel formation. So you need to be very careful clicking on your sell button, because price is like some pullback to that level of resistance that we were talking about in the daily time frame. Okay, in the 4 hours time frame. The sterling pounds against the Swiss franc, nice one of that expanding triangle. That was the expanding triangle we talked about in one of our reviews. Today we saw the Swiss franc gaining so much strength. Price just cruised through, breaking the lower leg of that expanding triangle. Anyway, let's now remove our line. We can now keep this one. Let me show you that. This one has been broken up and down. Remove this one. Daily time frame. That was the bounce of that previous level of resistance. Unfortunately, many traders were clicking on their buy button against that level of resistance. Let's see the weekly time frame. Weekly time frame, level of support. Still level of resistance there. Zoom in to see the type of candle that we are now seeing. This is a rejection bar, giving the hint that next week might be a bearish week. So you need to be careful going long around that area, even though it might not be a very good level to click on our sell button, but that's definitely level of resistance. And we're having this channel formation. See that channel formation, which is also a hint that price is likely to go back down. So be careful clicking on your buy button on the sterling pounds against the Swiss franc. Again, the only setup that we might see here is coming from the weekly time frame. So we want that candle to close for us to decide whether to take the trade or not. All right, we can keep this level of support. Nothing more. The New Zealand dollar against the Canadian dollar. This is a nice one. I told you I was following this. That's a heavy level of resistance. Let's zoom in to see this candle. That is something to watch for next week. Okay, nice reversal formation coming up there. We can redefine our levels here. This is a nice double top, double bottom. I beg your pardon. Can keep this. So let's wait for the breakout. That was all that happened for today. Sideways price behavior. In this pair, the directional bias is still to the downside. The New Zealand dollar against the American dollar, the American dollar is quite weak. It's super weak, the weakest of all, and that is why it is difficult for this pair to go down straight on. It's going to be absolutely difficult for that to happen. Maybe by next week, we are going to see some little retracement to the downside before price can bounce back up again. So let's keep this level of resistance and this one as support. Nothing much happened. The euro against the New Zealand dollar, in the 4 hours time frame, I was already proposing the channel here. Price is in the channel. That is another level of resistance. So price might be finding resistance around that area for the euro against the New Zealand dollar. Whereas in the daily time frame, I am also proposing a level of a channel level. That means price has a tendency to push to the upside, but this is not clear enough. So even though I am proposing a forward channel, it is not clear enough, so you shouldn't go short based on that. If you are long, you want to be careful, probably cashing out some profit just to make sure safe or moving your stop loss to break even. American dollar against the Swiss franc, breaking key level of monthly support. That's a massive breakout candle coming right here. We'll be searching for continuation moves. Okay, we are watching this pair, looking to see what's going to actually happen as price is breaking this key level of support. You can actually see the massive breakout candle. That means this is happening in heavy momentum. All right. I'm going to take out some lines right now. Okay, this is too far away, and to delete that. Monthly time frame, I'm going to remove this, just keep it here. I want everything that simple. Okay, nice. We are going to see better trading opportunities in the future with this type of price behavior. We hope this is going to continue. All right, so it's a breakout, and that is why we saw that straight move. It's a breakout. So we'll be watching for continuation formations in the weekly or monthly time frame. The sterling pounds against the Australian dollar. What's going on here? This is not really clear. We can remove this. It was a London Open breakout candidate for today. We followed it throughout the day, but as you can see, a fake breakout here, hesitation, nothing much happened, so no trade was taken. So let's keep this here, keep to this high. The Australian dollar against Japanese yen. This is another bearish pair. We had discussed this again. We had discussed this before. We talked about the possibility of a channel formation, and price is likely to come back down. Okay, we can now keep this this way. Not still clear enough. It is difficult to draw these levels. Well, let's just keep that. It's not clear. This type of price pattern is very hard to analyze. The euro against the American dollar, well, it has not hit its target. We talked about that target somewhere around in here. is the final level of resistance for the euro against the American dollar. So until that is hit, we will now begin to see some little strength coming from the American dollar. Now it is not yet hit. Let me just mark that level around the 1.2763 area. If price is able to make that push to that point, that is where it's going to find some resistance. Okay, straight move here. Very nice one, and congratulations to those who kept their trades from last year. We have been analyzing this pair since last year, where we're talking about this push to the upside. All right, nothing there. Let's see. Probably we might be finding a London open breakout set up here by tomorrow morning. The sterling pound against the American dollar. This is a pair that just kept pushing to the upside. For today, it's been a sideways price behavior. If this comes back down, closing below that level, or even for next week, then it's a fake breakout. So let's just keep that line there for now. Nothing to trade. Japanese yen, there's no need to wait. You can see that range. It's a wide range. Okay, wide range, nothing to trade. Sterling pounds against the New Zealand dollar. We analyzed this again before, talking about that pin bar happening at a strategic location. Finally, this week, price began to push to the upside. Much of movements that we have seen for this week have been straight breakouts. And you know, with straight breakout, you can't find much of valid trading opportunities. The euro against the Australian dollar, we analyzed this before as well. Much of hesitation. This is supposed to be a bounce point to the upside, but you can see that lots of hesitation there. For how many weeks? 1, 2, 3, 4, 5, 6. 1 month and 2 weeks. How many of you can actually hold a trade here for 1 month and 2 weeks? I'm not sure. Many traders can do that. All right, let's adjust this one. Bring it up there for now. Okay, 4 hours time frame. We can keep this one here. Let me change that to the 4 hours color. Delete this one. Don't want to keep too many lines. Actually, this 4 hours line is not looking too strong. We can remove that and keep this area. Okay. All right, let's leave it at this. This is the next level of support for the euro against the Australian dollar. If price comes to that area, it might be finding support from there on to bounce to the upside. That's for tomorrow. The Australian dollar against the Swiss franc, we analyzed this too so many times this week. We talked about this key level of resistance. Unfortunately, price never gave us any valid entry for this nice push to the downside. We were quite aware this is a level of resistance, but there was no valid entry or signal from price that we are ready to go short. So in that case, we were flat, no trade was taken. Just take off some lines. Now the counter trend line is even closer, so we can keep that counter trend line. Price actually is trading very close to the counter trend line. That's those bounces here and the pullback to retest can bounce price back down. But remember, these are breakouts. Canadian dollar against the Swiss franc, another breakout. This has been here for some months. It's been trading at this particular area for 1, 2, 3, 4, 5, 6 months. 6 months in a row. Price has been within that range. That's quite boring. So right now, level of support broken. This is that level that has been holding price as support. If price makes any pullback to that area, you might be finding another short entry right here. So the directional bias for this pair right now is to the downside, the Canadian dollar against the Swiss franc. Let's take out some lines. This one can now go, it's becoming too old, and keep this one. Okay, nothing else. No good entry for us. This is where we would have been looking for our entry, but as you can see, price made that pullback, fell shy to retest that level. Besides, this was a daily level of support, so no trade for us. This is where we would have gotten the opportunity for the week, but no trade there for us because we wouldn't have traded against this daily level of support. For other days, it has been flat, and today we got the breakout against that level of support, so no trading opportunity here for us. The Australian dollar against the New Zealand dollar. Just look at the weekly time frame. With what is happening here, you already have the idea that there is just too much buying pressure around this area, and price is likely going to shoot to the upside by next week. You can see that buying pressure right there. This is actually looking bullish, although we have plenty of hesitation. For so many weeks, price has been flat around that area, but for this week candle, this one here, it is showing so much buying pressure. That means for the Australian dollar against the New Zealand dollar, if you are like trading this pair, please avoid clicking on your sell button. Price is likely to push to the upside. Okay, what else? Nothing else. American dollar against the Canadian dollar. This is a bearish one. Still bearish and likely to hit this level probably by next week. In the 4 hours time frame, this flat bottom triangle was broken. That was a nice flat bottom triangle. That was the breakout. This was the pullback and likely continuation move. But we are finding just too much hesitation on that continuation move. Directional bias for this pair remains to the downside. We have not seen any entry in this market. Again, although it is still bearish, but in the 1 hour time frame, look at this. That is early sign of warning of exhaustion that, hey, be careful, I might soon be pushing to the upside. So whenever you see this type of price behavior, be very hesitant going short. Here, there is no need to waste our time. Price has been flat. Euro against the Canadian dollar, nice breakout of that level. Price is bullish, absolutely bullish. Directional bias for this one is to the upside. Hopefully tomorrow we are going to see a nice London open breakout setup for us to look for long entries. The euro against the Swiss franc, finally price is breaking down. Remember, we talked about this channel again, which usually should end in a breakout to the downside. We have gotten the breakout right here, so let's see if we will get continuation moves. That's a pullback, then a continuation push. For now, there is no valid entry. 1 hour time frame, quite an ugly chart. Remove that. Not a clear one. I will only keep this level. Okay, let's see. The Australian dollar against the American dollar, trading off that key level of resistance. We discussed this yesterday. It's a key level of resistance. Because of that, we are seeing this little hesitation again. Nothing to trade. 4 days, 1, 2, 3, 4. Really nothing to trade. We got this range where we're waiting for better pullbacks into that zone to go long. Price just fell shy, and from there on, bang, early push, early pullback, but no entry for us. Canadian dollar against the Japanese yen, breaking to the downside in the range. Let's see this. This is not clear enough. This is not clear enough. Just avoid this pair completely. The euro against the sterling pounds. This is finding support. Do not go short around this area. Don't click on your sell button. The average daily range for today is already made. And again, you can see how price usually gives us a hint that, hey, I am about to turn for us to get out of any trade. So you can see that hint in the euro against the sterling pounds. These are things that do happen, are things that we see on a daily basis. Sterling pounds against the Japanese yen, nice trade. For those of you who followed the channel today, we actually discussed it earlier on. Those channel traders would have made their monies off that level. Okay. This also signifies that price might be pushing to the downside. Okay, just within the channel, nothing yet. Swiss franc against the Japanese yen, nice push to the upside against that level of resistance. Couldn't break, but not a reversal candle yet, so no entry for us. There is no valid setup. It could go back up. No entry for us. Okay. All right, so that's just it. That's just what we have in the market. It's been a little bit of a boring market, but for the past 2 days, sorry, between yesterday and today, we are seeing some action. Price tend to be pushing. The only trade running for now is that coming from the New Zealand dollar against Japanese yen, and sitting in some nice profit. Is this a nice profit? Not really. Sitting in some small profits right now, just about let's say 35. Am I correct? Let me look at that again. Okay, just about 44 plus 44 pips right now. It's doing plus 44 pips right now, so we will just keep that trade running. Okay. All right. Nothing. All right, take a break. If you don't see anything to trade, just walk away. Even if it is one trade you can find, take that trade and keep it. If there is nothing to trade, close your chart and walk away. Thanks for watching. If you have questions or contributions, please feel absolutely free to send them to us via the live chat window or in the Telegram group or email. Anywhere, feel absolutely free to ask your question. We'll be talking again before the London market opens for tomorrow. Bye for now.